Check it. Alright, y'all, what is up? You are back for another video with DataZero. In this video, we're looking at the meme stocks, AMC and GME. We're also looking at the overall stock and crypto markets. We're going to be giving you guys predictions, analysis, technicals, and news to give you guys an update and prediction for the rest of this week. This video is not financial advice and should not be taken as such. We're going to be looking at SPY, AMC, GME, Bitcoin, and much more in this video. You do not want to miss a second of it. Everything you need to know as a trader and investor if you hold stocks and crypto. Let's not waste any more of your precious time and go ahead and hop in the charts, the facts, the data. Let's go. All right, guys, what is up? You are back for another video with DataZero. In this video, we're looking at the overall cryptocurrency market, the overall stock market, and the meme stocks. This is your daily outlook and prediction. This video is not financial advice and should not be taken as such. Please do your own research and due diligence before buying any stock or crypto asset. With that being said, let's go and hop in the charts, the facts, the data, showing you guys exactly what is going on based off of those things. Now, you want to be prepared for tomorrow. We have a major data drop coming up, guys, as we do have FOMC coming tomorrow, and then we have inflation year over year, and we will be talking about this in the stock market. We're going to hop into Bitcoin, though, starting off the video, showing you guys what's going on for the crypto market and Bitcoin. So Bitcoin did see that pop to the upside that we were looking for. 72,700 was that top there. Bitcoin did see a pullback and move back to the downside. We are currently slightly below the 69.2K level that we need to break above to be bullish. You want to see Bitcoin break above 69.2K. The reason why you want to break above this level is because this is the previous all-time highs. This is the level that it really needs to break above and use as support to see a bullish move to the upside. So if you want to see Bitcoin continue to move to the upside, continue to be bullish, you have to be above that 69.2K level. It does look like we will be breaking that level. As you guys can see, we have a little bit of an inverse head and shoulder starting to form here. As you guys can see, we have a drop down, a head here, and a possible shoulder starting to form here. Even if Bitcoin did come back down to about 68.5K, still making that inverse head and shoulders, because you see how this shoulder drops down, we could be dropping down and still get that push to the upside for an inverse head and shoulders as long as we break above 69.2K after the pullback. So it does look like we are going to break back above it here on the short term. I'm expecting this to probably happen here tomorrow, and probably in the later half of the week we could see Bitcoin back at that 70K level. I do expect more bullish moves to the upside based on what I'm seeing right here. But it looks like for the short term, we're going to be seeing a little bit more consolidation before a move to the upside, breaking that 73.8K level. That's the level that we really want to see broken as well to get to that 75 and 80K levels that we are looking for the price targets. A lot of these moves really coming from the BlackRock ETF. If you look at the BlackRock ETF IBIT, you guys can see a lot of these moves starting to form. If you go ahead and look at the charts there, you guys can see we had this bullish pennant forming right here. We did have that push to the upside, then we did pull back, but it is making higher lows. So it does look like it's going to be moving to the upside, and that's going to help Bitcoin move to the upside. So I do think Bitcoin is still bullish, but we might need to consolidate a little bit longer before making that move up. This push to the upside was a little bit premature as well. If you go ahead and look at the pennant, I expected a little bit more consolidation over the next couple of days before the move up. So that may be why we got rejected. We kind of moved up a little too early, and we do need a little bit more consolidation. Even here on Bitcoin, you guys can see that we had a couple more days of being inside the pennant before making the move, but we got this pop to the upside. So coming back inside of the pennant and retesting these levels and making higher lows is still bullish to me, in my personal opinion. So I am bullish on Bitcoin in the short and long term. I'm thinking Bitcoin is going to see a move up and probably still will be able to get to that 75, 80K region based off everything I'm seeing here right now. But we really want to see it get back above 69.2K to really confirm everything and remain bullish. Again, that level is very, very important because it is the previous all-time highs. Ethereum holding up pretty well. As you guys can see, Ethereum at 3.5K. You really want to see Ethereum hold 3.5K to be bullish. Ethereum doing a little bit better than Bitcoin. As you guys can see, Ethereum had this pennant here and it didn't come back inside of the pennant. It actually came out and made a higher low. So this is bullish on Ethereum. This could be a little bit of a precursor of what you're going to start seeing. Bitcoin topping out and then some of the altcoins making gains more over Bitcoin. Again, this could be just a little bit of the start of what altcoin season would look like. Again, Ethereum did pull back with Bitcoin. Altcoins did pull back with Bitcoin. But once you start to see Bitcoin push up flatten out and then pull back, you will see altcoin season really start to flourish. I believe this is going to be in the summer of this year based off what I'm seeing in the crypto market. We will be tracking that here on this channel, so make sure you like and subscribe to get more stock and crypto analysis with accurate predictions, because we were the one to call the Bitcoin bull run way back here when it was at 15K. Everybody's telling us it's going to 5, it's going to 10, it's going to 0. We told everybody that it was actually going to reverse and make a massive move to the upside after it broke out of the falling wedge, and this was way back in 2023. So we did call this massive move to the upside and these price targets that you are seeing here, and you guys can check out my videos to see those receipts. So as you guys can see, this is what we have for the overall crypto market. Let's go ahead and move into the overall stock market and show you guys what's going on and an update on SPY and related and key stocks. So as you guys can see, SPY is pretty much flattening out. We did have a red day today. Pretty eventful day, as we did come back down and retest that 516 level and get a decent bounce off of that. So that is pretty bullish here for the short term. It's looking like that they want to push it back up to about 523. So it looks like the bulls, PPT, everybody wants to push SPY back up to about 523.50. So I'm thinking that 523.50 retest is still coming. Okay, we had this move to the downside, we found support, and now we're getting pushed back up. Okay, so I do think that 523 is coming to play. I talked about the 523.50 retest a lot this week. I think it is still in play based off what I'm seeing here. If we go ahead and go what's happening into after hours, pretty much my prediction is tracking. I'm expecting to pretty much consolidate in these ranges and then push to the upside tomorrow. It might not be right away, but I'm thinking 523.50 is definitely on the cards in my personal opinion, especially after this reversal that we've seen here. We did see a bit of a double top start to play out, and SPY is showing signs of weakness. And again, I think what's going to be happening is SPY is going to flatten out and start to roll over, but still the thesis remaining that 525 will be the local top from my last couple of videos is still in play. We talked about this in my last couple of videos, that I thought 525 was going to be the top. We talked about this over 5 days ago. I keep showing you guys the clip in case you are new to the channel. We did call for this move, another move to the downside, and doing what I said, leading into an overall downtrend from this 525 level. I think this is going to be the top, at least for the local top, for at least a week or two. And that was over 5 days ago, so we are in the first week, and if this continues, it will continue to be the second week. So I did say for a week or two this was going to be the top, and that did become the case. So you guys need to press subscribe for accurate technical analysis and predictions. We also called this massive rug pull here from this 523.50 level when we had this move to the downside. We did call that move as well because we had that rising wedge and that bear flag type structure that pulled us back down. Now we are looking for a possible retest of that 523 level, 523.50. I'm thinking we could possibly see that tomorrow early, but we really have to watch for inflation. Inflation is going to really be the key for what's going on. Now, we've seen the market act irrationally before, so I would not be surprised if we did see a pump, even if inflation numbers are not good, but then see immediate rug pull after that. Okay, so basically what's happening tomorrow, if you don't know, inflation is dropping. Okay, and if you don't know what's going on in the economy, inflation is very, very high. We have low growth. We basically have stagflation. We literally have stagflation. If you look at the GDP growth, this is why the market should not be rallying. This is why I consider we are in a bubble, especially because we're having a concentration in the main high cap stocks instead of an organic bull run that starts in the lower cap stocks and moves its way up. Now, as you guys can see, we also have inflation remaining the same and or elevated. This is not what the market wants to see. So the first thing you need to realize that if inflation numbers come out elevated, the market will tank. Okay, the market will tank. Now, if they stay around the same, which is what the consensus is staying, I do think we could still see that pop to the upside and pull back. But if they come out elevated, it's definitely going to be shocking the market. Now, if they come out lower, which I don't believe it's going to be, especially with what I'm seeing here with the consensus and forecast, that would be very, very bullish for the market. But based off the data that we've seen before, I'm thinking we will see bearishness for the market, in my personal opinion, especially around the FOMC. So this is why I do believe we could see, and tomorrow's going to be a crazy day to trade. So if you are new, maybe sit this one out. You could definitely make a ton of money, a huge opportunity. But if you're new, it's going to be rough because it's going to be volatile. There's going to be lots of swings, especially with the data sets that we have dropping and FOMC. So, guys, I'm thinking in the morning we could see bullishness, and then around 2 o'clock, 1 o'clock, 1:30, we start to see bearishness, probably pulling us back from that 523 level or these higher highs that we do look like we're going to be making. So I do think SPY is going to try to push up and then get a rejection. I don't think inflation is going to be so much the hitter as the FOMC. Why do I think that? I think the Fed finally has to come to reality, especially if we get another bad economic report on inflation, that they are not working, that the rate cuts are not working. They didn't do what Volcker did back in the 70s. They didn't raise rates high enough. You must raise rates higher than inflation in order to bring inflation down. We simply didn't do that. They raised rates very, very slowly. They didn't do what they needed to do to shock the economy because they didn't want to make the market crash. They didn't want to ruin anything for any political people that are in office right now. I'm not saying I'm for or against them, but they needed to have Bidenomics going. They needed to have this rally in the market, so they couldn't cut the rate, or they couldn't raise the rates to where it's going to crash the market. So they slowly raised the rates, but what is that doing? It's not quelling inflation, and it's actually going to cause a bigger problem. It's going to cause a second wave of inflation. Once inflation comes, it's sticky. It doesn't want to go away. That transitory inflation is not really real because inflation is always sticky. It doesn't want to go away. So now we have this inflation. We don't have rates high enough, and they're not doing what they need to do. The Fed needs to have a backbone and really do what they need to do instead of listening to people telling them to cut rates that don't understand the economy. Because if you cut rates right now, everything would go crazy. The inflation would go absolutely insane. The market would skyrocket, and you would see massive inflation like you've never seen before. But since the Fed has not done what they needed to do, they've caused an economic disaster. They slowed down the economy just enough to cause stagflation, keep the inflation high, but also slow down the economy. That's devastating. I think the Fed needs to really wake up and see what is going on. And people that believe the narrative of the soft landing also need to wake up, because the soft landing is not happening. It is clearly not happening based off the data. We have stagflation. Okay, we have stagflation, and I'm the personal believer that we are going to see a second wave of inflation. This would be absolutely devastating for the market if we start to see these numbers creep back up to 4, 5, 6, 7%. It would be absolutely devastating if we seen a second wave of inflation. Fed would have to buckle down. They would have to admit they failed. This market would understand and see that they have no control over the economy. They would have no confidence in the Fed, and also they would have to raise rates. Would be devastating for the market as well. So I'm thinking we could see a lot of consequences from the Fed not taking the actions that they needed to take to get inflation to where it needed to be. And I'm thinking, and you heard it here first, if it does happen, a second wave of inflation is going to be coming in the energy and in the other sectors, especially like food, which is what they exclude from the CPI, which is kind of crazy. But I'm thinking this data will show up in the CPI, especially once those things start to elevate and cost even more. It will start to roll over and spread to other areas of the economy. So I do think we're going to see a second wave of inflation, in my personal opinion, and that would be absolutely devastating for the market. And I think tomorrow the Fed might finally have to come to terms with that, and we will see it, especially if we get another bad report. So that is what I'm looking at. So that's why I think we could see a rug pull in the afternoon after we get bullishness in the morning, and then see a rug pull in the afternoon. And that's what I'm looking at. Now, if you guys want live updates and predictions, I get on live 9:15, 9:30 a.m. to about 4 p.m. Eastern Standard Time every single day, market open to market close. So if you guys want large live predictions as it's happening, see the FOMC, get my reactions, my commentary to that, go ahead and tune in tomorrow. Tomorrow's going to be an absolute banger of the live stream. So tune in tomorrow to get that information as it does drop. So this is what I'm looking at for SPY in the overall market. Let's go ahead and hop into the meme stocks and show you guys what's going on for AMC and GME, and show you guys what's going on for the meme stocks. So GME cost to borrow is remaining same, but AMC's cost to borrow is slightly rising. As you guys can see, AMC cost to borrow sitting at 1.93%. Earlier in the day was all the way up to about 3%. This is because they're trying to get a ton of shares to short AMC down. Ortex is reporting about 15 to 19% short interest right now. Fintel is reporting about 16%. I told you guys in the last video that I'm certain that once we get a new report from Fintel that it would go up. You guys can actually check the last video if you want. I don't know if I have the clip on hand, but you guys can check the last video that I just dropped yesterday. If you want, guys, I was talking about this, saying that I do think we'd see short interest for AMC going back up. This is the video right here. Once we get that, and I did say that in the video, and lo and behold, we did see short interest going back up for AMC. Short interest reported at 16% right now, ladies and gentlemen. Shorts are getting back in the trap. We have not sold. Some people have sold. The paper hands have sold, but the OG apes are still here. And this is what could cause another short squeeze. What we want to see next is cost to borrow rise. We're already starting to see it spike. We want to see FTDs return. Once the FTDs start to return, ladies and gentlemen, we are back in the game. You can believe it or not. It doesn't matter. The price is irrelevant. What matters is happening in the background. Are you here for a short squeeze play? If you are, you have a chance of buying at extremely low prices. Again, this is not financial advice. Very risky, especially because the players you're going against the market makers, huge hedge funds when you go in this play. That's who we're trying to squeeze. But you could be buying at these low prices, and we could potentially see another short squeeze because short interest is going back up. They're trying desperately to push this thing down, especially while the market is starting to roll over, which I find very, very interesting. Again, my thesis is that once the market starts to pull back, AMC and GME will start to rally. So I do believe that is the case. And some people think that I wish and dream for the market crash. I'm simply looking at what the data is telling me. I'm looking at the stagflation. I'm looking at the bubble in the market. I'm looking at what the charts are telling me, and everything's saying the same thing. So as you guys can see, I believe AMC and GME could see a recovery, and GME is also showing technicals that could see a recovery. AMC as well. We have bullish divergence, prices trending down while RSI is trending up. You guys can see from here on, price trending down, RSI trending up. We have a falling wedge with a gap fill setup. These are multiple indications that we're going to pump to the upside. And in fact, I just posted a trade on Tesla that has very similar setup. Okay, you have a falling wedge with a gap fill and bullish divergence. Those are all key indicators that you're going to pump back to the upside. The gap fill has to get filled. Bullish and bearish divergences always play out. So this is a very, very secure play in my personal opinion, and we're currently breaking out of the falling wedge, retesting that. I do think GameStop's going to try to work its way back up towards that $12 level. Once we hit $12, we could absolutely pump up to that gap fill. I think that GameStop is going to start making a recovery. AMC is going to start making a recovery, and when they do, that is going to be a major problem, especially for AMC with this short interest going up, with the cost of borrow going up. They're going to be right back in the same position to get squeezed, and we could see a massive pump. Now, we don't want to get too hyped. We really want short interest to get back in that 20% zone. That would be great. We want to see these FTDs return, and we want to see cost of borrow to get at least 10 or 15%. So we are not there yet, but guys, we are seeing the evidence. We're seeing the signs. We're seeing the liquidity dry back up, and we are starting to see the desperation return to the shorts. This is what I want to see, and this is when they will start to lose control. Right now, they have a ton of control because liquidity is freed up. They have a ton of shares to short it down and push it down. They have a ton of control. But once we get this thing locked back up and liquidity locked back up, we can start having control. We can start squeezing them out, and we can start having confidence that we could see a massive short squeeze, especially if we can get them cost of borrows back to 1,000% and so on and so forth. The only reason we didn't squeeze before is because we needed more time. They got the reverse split. That freed up liquidity. They were able to cover the FTDs. If they were never able to cover those FTDs, we would have absolutely seen a market breaking short squeeze because they would have had to buy those shares out of the market. That would have pushed AMC up with all of that cost to borrow, with all of that short interest, and there would have been short squeezed without a doubt. In my mind, they had over 50 million FTDs that they needed to cover over that because they've been accumulating. We were on the threshold security list for 45 days. There was going to absolutely be a market breaking short squeeze when they bought all of the shares out of the market, and then that cost to borrow, dude, it would have gotten insane, okay? So once we see those FTDs start to return, if we look, We are seeing a little bit of action in FTs, but nothing like we need to. We need to see that cost to borrow go back, and when we need the short interest going back up, and this is what we're starting to see. So guys, this is on the sign to the right track. AMC needs to start bottoming, and then we will have more power as well, especially when it starts to trend back up. I believe we are in the process of bottoming, in my personal opinion. AMC almost in a little bit of a falling wedge shape as well, but we do have bullish divergence, price trending down, RSI trending up, green MACD, all indications that we're going to have a move to the upside. Gap fills moving to the upside as well. These are all indications that AMC and GME could return back to the upside. If you see AMC break above $3.05, you're going to see a pop to the upside. 305 is the price target that we're really looking for. That should send us to about 315, and from there we could go to 350. GameStop needs to break above $11.15. If you see $11.15 broken, we could easily get to $11.80 and possibly $12, and that could send us to the gap fill. Now, this might not happen this week, but I do think between this week and next week, we could see a move, especially if we start to see the market pull back. And I'm really, really interested to see what happens to the market after FOMC, and I'm really, really interested to see how the Fed reacts to a bad inflation report, especially if we do get it, or if things remain the same, because it really shows that the rate hikes are not working. Guys, this is everything I have for you in this video. If you found it informative, go ahead and drop a like. Press subscribe for more content like this, and I appreciate you if you did watch to the end of this video to get your 10,000 hours and master your craft. Go ahead and drop a like. Press subscribe for more content like this, and as always, y'all, have fun, stay safe, make money, peace out. All right, y'all, that was the video. If you found it informative, go ahead and drop a like and press subscribe for more content like this. You can check me out on Twitter and Discord for even more DataZero updates. The Discord is right now on sale for $75 for a lifetime invite. If you want to get involved in that for free trades, exclusive technical analysis, and much, much more, an exclusive community, hit me up on my email, DataZeroOfficial5, or Instagram, link down in the comment section below. I prefer email, but you can hit me up on Instagram as well. Say, hey, I want to join the Discord. I'm going to send you payment information. You send the payment via PayPal or Cash App. Once I send the payment information, I'll send you the link to get in. It's as easy as that. You'll have access to the trades, the exclusive community, and everything else as well. Right now on sale for $75. So get in before the price goes up. That is this month only. And I truly appreciate you if you watch the end of this video to see this message. And as always, y'all, have fun, stay safe, make money.